the bloody truth behind legitimate asset exchanges. Just like gold in the past, overnight, the US dollar was toppled and a new currency officially took its place. From 2008 until now, American capitalists have spent exactly 17 years orchestrating this plan, and today, you and I are witnessing this historic moment together. No matter how much smarter, harder working, or better connected someone may be compared to you, under this historical purge, a massive swap of wealth between you and them will take place. I'm not talking nonsense because a monetary revolution is genuinely happening. What do I mean? Currently, the world is divided into two schools of thought. The first believes that the US is no longer stable, claiming that America is on the verge of collapse and that de-dollarization is necessary, meaning everyone should stop using the dollar. The second school of thought argues that no matter how weak the US becomes, no currency in the world can replace the dollar. The entire world still has to buy US bonds because global foreign exchange reserves are primarily US bonds. You can see these two viewpoints seem contradictory. One says it's doomed, the other says it's still fine. But today, the US is telling you outright that, in reality, these two sides are not in conflict. Why? Because even if the dollar and US bonds are truly facing issues, even if they genuinely need to be replaced by a new currency, it doesn't matter. The rules of global currency are still dictated by American capitalists. It's like in ancient times when power rested with the emperor's father. Even if the current emperor lacks competence, it doesn't mean you can take the throne. The emperor's father only needs to replace the current ruler with another of his sons, and that's enough. Everything the previous emperor did becomes untouchable, and the dynasty remains in the hands of the emperor's father. In other words, even if the dollar truly goes to hell, as Warren Buffett once said, capitalists only need to introduce a new currency to replace the dollar and continue manipulating that new currency. Thus, not only is U.S. monetary dominance reestablished, but the entire mechanism of exploitation from before can be repeated once again. What do I mean? Golden Rules warmly welcomes you all. 100 years ago, when the world still used gold for transactions, if you handed someone a piece of paper and said it was a US dollar, they might beat you up and send you to a mental hospital. Back then, people only trusted gold, a currency seen as created by God. But after 1930, the entire world sent all their gold to US vaults and switched to using the US dollar for transactions. Why? Because as long as you had dollars, you could exchange them for gold from the US. So why carry heavy gold around? But over time, everyone got used to using dollars, so the US abolished the gold standard, meaning dollars could no longer be exchanged for gold. In other words, from that moment, the dollar defeated the currency created by God and became the global currency. And today, in 2025, American capitalists are reenacting that history once again, declaring to the world that as long as you exchange dollars for the new currency, you can always exchange it back for dollars. You no longer need to hold dollars. Moreover, this new currency doesn't need to be carried, won't get wet, and can't be stolen. It's also the entry ticket to the virtual world, the world of the metaverse. To put it simply, in the past, people only trusted gold, so to make the dollar king, American capitalists tied the dollar to gold, making people believe that trusting gold was the same as trusting the dollar. Once the world trusted the dollar, they detached it from gold, abolishing the gold standard. Now, to crown the new currency, they're doing the exact same thing. Since people only trust the dollar now, they tie the new currency to the dollar. And once everyone trusts the new currency, won't they just detach it from the dollar? Many say Bitcoin is worthless, a bubble, garbage, a scam. But if I gave you 10 Bitcoins right now, would you want them? Simply put, last year, one Bitcoin was just over $40,000, and now it's up to $100,000. So, if I gave you 10 Bitcoins, you could sell them for $1 million. Would you really not want that? But don't misunderstand. The new king replacing the dollar isn't Bitcoin. I don't need to convince you today whether Bitcoin has value or not, because I've already said it 100 times. Whether you believe it or not, Bitcoin has become the springboard for the new king to take the throne because the US has passed a genius law. On the surface, it looks like they're giving a green card to all cryptocurrencies, legalizing Bitcoin to better protect people's assets. But in reality, it's a way to crown the new currency, stablecoins, as the replacement for the US dollar. Once stablecoins take the throne, whether people worldwide buy U.S. bonds or lend money to the U.S. will no longer matter. Because the U.S. can directly take your money and lend it to itself to spend. What does this mean? If you don't want your savings, assets, or salary to become a sacrifice in this monetary revolution, or if you even want to seize this opportunity to change your social class, then you can follow my channel. I'll continue to provide you with more information in the future. And if you're worried you'll forget after listening, or feel like you're wasting time, you can like this video to automatically save it to your playlist so you can revisit and act on it anytime. First of all, since 2008, American capitalists have been paving the way to replace the dollar and crown the new king. What does that mean? If you watched my video from last week, you'd understand. In short, as early as 2003, Buffett used the story of the Spendthrift Island and the Thrifty Island to warn capitalists internally that if the U.S. continues to use real money to buy goods produced by the world and then relies on U.S. bonds to borrow back the money it spent, this approach will ultimately lead to one outcome. The U.S. won't be able to repay its debts. When that happens, the world will stop lending to the U.S., and the money spent won't be recoverable. In the end, the U.S. will have no choice but to keep printing money, lending to itself to spend, causing the currency to lose all value. That's why, in 2008, lowering interest rates could no longer save the U.S. economy. They had to start printing money. By 2020, to save the economy, they had to print money on an unprecedented scale, without limits. In other words, 5 years ago, lowering interest rates and printing money started losing effectiveness and could no longer save the economy. Now, the U.S. doesn't even dare to lower interest rates anymore. Because last year, as soon as they lowered rates, no one bought U.S. bonds. The dollar plummeted, and this year, it even triggered a crisis in both stocks and bonds. That's why many people find it strange. Buffett, who has never commented on the U.S. before, has been repeatedly appearing since late last year and early this year, warning that the dollar is going to hell. In reality, he's sending a message to American capitalists that it's time to crown the new currency. So, to be serious, it's not yet about crowning, but about staging a rebellion. Think about it. When the dollar staged its rebellion back then, it was done very quietly because the world was still using gold. If they suddenly announced that the dollar would replace gold, it would be like telling the world they were rebelling, and it would never succeed. So, they had to move step by step, quietly. First, they tied the dollar to gold, absorbing all the world's gold into the U.S. Once the world had no gold left, only then did they openly take the throne and detach from gold. Isn't that exactly what's happening now? Today, I'm telling you that stablecoins are the new currency replacing the dollar. But many people don't even know what stablecoins are. However, what's happening now is identical to back then. At that time, the dollar's rebellion plan was called the gold standard. Now, the new rebellion plan is called the genius law. On the surface, stablecoins are still tied to the dollar, but in reality, they're quietly replacing the old currency. So what are stablecoins? In fact, this monetary revolution began in 2008. That's when a new currency appeared on the internet, Bitcoin. Unlike the dollar, you don't need to carry Bitcoin, it won't get wet, and as long as you remember the password, you can transact anytime. Most importantly, it's decentralized, meaning it's not controlled by any country in the world, and no one can trace the source of your money. As a result, countless funds, both legal and illegal, poured into Bitcoin. So what did the U.S. do? On the surface, they always claimed not to recognize Bitcoin, constantly cracking down on it. But at the same time, they allowed Bitcoin futures contracts to be issued. Isn't that contradictory? Back then, everyone thought the U.S. feared Bitcoin would replace the dollar and undermine its status as the global currency. So, the U.S. defined Bitcoin as an investment asset, like stocks, not a currency. Simply put, if you buy Bitcoin today, its price might rise from $10,000 to $100,000, but it could also drop from $100,000 to $10,000. The volatility is huge. Using Bitcoin for transactions would be very inconvenient. For example, if I use 10 Bitcoins, each worth $10,000, totaling $100,000, to buy your house, you expect those 10 Bitcoins to be worth $100,000. But right after you receive the Bitcoins and I get the house, Bitcoin's price drops to $1,000 each. Now, your 10 Bitcoins are only worth $10,000. This is similar to why people don't use stocks for transactions. Too much volatility. So, if you use $1 million worth of stocks as collateral at a bank, you might only get a $500,000 loan. In other words, in terms of function, Bitcoin could replace the dollar. But the US doesn't recognize Bitcoin and positions it as an investment asset, not a currency. This means the US's first step was to create opposition between Bitcoin and the dollar, making the world believe the US government wouldn't allow Bitcoin to replace the dollar. But since Bitcoin is a cryptocurrency and the US can't control it, they had to let it exist. So, Bitcoin became an asset for investment and money laundering for many people, and its value was built from there. The second step was introducing the new king. Previously, the world's ultra-rich stored their wealth in Swiss banks. Why? Because Swiss banks had a secret confidentiality mechanism. No one could interfere, and money deposited in Swiss banks couldn't be frozen. Moreover, Switzerland is a neutral country, unaffected by wars, making Swiss banks the safest in the world. Billionaires, heads of state, and even national treasuries deposited money in Swiss banks. But after the financial crisis, the US demanded that Swiss banks disclose certain account information to strengthen banking oversight. As a result, the confidentiality of Swiss banks began to decline, and massive amounts of money flowed into Bitcoin, causing its price to explode. But as mentioned, Bitcoin's price volatility is too high. For the wealthy, assets fluctuating like that are too risky. So, at this point, the new king officially appeared. Some American capitalists invented something called stablecoins, stable money. Simply put, when you transact with Bitcoin, say you receive $100,000 in Bitcoin but fear its price will drop, you can immediately lock in that $100,000 value, sell the Bitcoin, and exchange it for $100,000 in stablecoins. With those $100,000 in stablecoins, you can exchange them back for $100,000 or buy Bitcoin again anytime. That's why over half of the people trading Bitcoin worldwide now use stablecoins. The issue of Bitcoin's price volatility, which prevents it from functioning as a currency, has been resolved, hasn't it? More importantly, before, if you wanted to do business with Americans, you had to convert your money to dollars, go to a bank, fill out a ton of forms, and submit a transfer request. Even then, the money wouldn't arrive immediately. If it wasn't a holiday, you'd still have to wait a few days because the money had to go through 2 or 3 intermediaries, and they charged high fees. International transfers weren't cheap, and by the time the goods arrived, the recipient might not have received the money yet. But now, the whole world can use Bitcoin or stablecoins to transfer money. In the blink of an eye, the money arrives, and the transfer fees are almost zero. In other words, the US's second step not only stabilized Bitcoin's price, but also dismantled the traditional money transfer system, gradually making the function of cryptocurrencies more like the dollar, encouraging more people to use the new king, stablecoins, for transactions. The third step is the current legalization of Bitcoin and stablecoins. Previously, when trading Bitcoin, we had to use private exchanges, which often took your money and disappeared. But last year, the US directly legalized Bitcoin through ETFs. Simply put, buying and selling Bitcoin is now legal. You can buy Bitcoin ETFs just like you buy US stocks, through any brokerage or bank. And this year, just a few days ago, the US mandated that stablecoin issuers must hold cash or US government bonds at a 1-to-1 ratio. In other words, if you exchange $1 million for stablecoins today, the stablecoin issuer must use that $1 million to buy US government bonds or keep it in a bank without touching it. So, when you want to exchange your stablecoins back to dollars, these companies just sell the bonds or withdraw the cash to pay you, ensuring you don't lose money. In other words, stablecoins are now tightly tied to the dollar and US government bonds. Let me simplify it further. First, they attracted dirty money, then forced the world's billionaires to move money from Swiss banks to Bitcoin, and finally sucked in retail investors' money. In this process, they initially stripped Bitcoin of its transactional function as a currency, then used stablecoins to restore that function, even dismantling their own traditional money transfer system, and finally guaranteed stablecoins to tie them to the dollar. That's why you see Bitcoin's price soaring to $100,000. But when we trade, whether it's stocks, gold, Bitcoin, or yen, no one has a crystal ball to predict the future. We don't have insider information either. Positive news only appears after everything is done. So how do we trade? Simple. Follow the footsteps of those with insider information, the ones setting up the game. Of course, they won't tell you when they buy or how much they sell, right? But charts can. All the trading footprints of big investors and capitalists are clearly shown on charts. Our job is to follow the trends they create, see where their money flows, and then decide to buy or sell. The most important thing is this. Some might not understand why the US would replace the dollar with stablecoins and go through all this effort. Friends, after this genius bill was passed, stablecoins are tied to the dollar and US government bonds. This means every stablecoin issued must be backed by a dollar's worth of bonds. What does this mean? Many will think this ensures stablecoins can always be exchanged back for dollars, just like dollars could once be exchanged for gold. I'm laughing, friends. Can you still take dollars to Fort Knox and exchange them for gold? When the dollar was tied to gold, it was essentially a promissory note issued by the US government. You give me gold, I give you this dollar note, and you can use it to get gold back. But to fund the Korean and Vietnam Wars, the US printed so many dollars that the total dollars in circulation far exceeded the gold in Fort Knox. At that time, the French president sensed something was wrong, realizing the dollars circulating globally were many times the actual gold the US held. If everyone brought their dollars to Fort Knox to exchange for gold, the US vaults would be emptied. So, France acted first, accumulating and borrowing dollars, then bringing them to Fort Knox to exchange for over 3,000 tons of gold. When they couldn't exchange anymore, they called on the world, saying the US didn't have enough gold to cover everyone's dollars, and soon those dollars would become worthless paper. By 1970, the world brought their promissory notes to demand gold from the US. The result? We all know it. The US flipped the table and stopped paying. They declared that from then on, gold was no longer money, the dollar was. In the US, privately holding gold could even land you in prison for up to 10 years. At that moment, the US turned the promissory note, the dollar, into real money. The debt note disappeared, didn't it? By the same logic, back then, the US's promissory note was the dollar. But now, isn't the US's promissory note the US government bonds, or treasuries? If the world brings $36 trillion in US bonds to demand repayment, can the US pay? They could pay in dollars, but then the dollar would become worthless paper. So what to do? Just do what they did before, right? Turn US bonds into money, and the debt note magically disappears. Here's the key, friends. When stablecoins replace the dollar, and one stablecoin equals $1 worth of US bonds, from then on, the US no longer needs to sell bonds. This means the US no longer needs to borrow money from the world. Because when you exchange $10 billion for stablecoins, the stablecoin issuer takes your $10 billion and buys $10 billion in US bonds. In other words, from now on, as soon as you exchange dollars for stablecoins, those dollars are used to buy bonds. You hold stablecoins, the stablecoin company holds bonds and earns interest, and the US government gets cash. So, by letting stablecoins replace the dollar, US bonds, the promissory note, become money, and the debt effectively disappears. I know this sounds complicated, so let me simplify. When the dollar was tied to gold, it was a promissory note. When the US couldn't pay in gold anymore, they abandoned gold, turning the dollar note into real money. Then, they created a new promissory note, US bonds, promising how much the US owes you. So, US bonds are like the old dollar, both promissory notes. While today's dollar is like gold back then, the currency. What the US wants now is to turn bonds into stablecoins and stop using the dollar. That way, the current US bond debt, like gold back then, will be erased. This is called monetizing public debt. To simplify further, don't mind me talking so much. When the US abandoned gold, they were telling the world, you can't exchange dollars for gold anymore. Use dollars directly for transactions. It's the same now. You can't exchange US bonds for dollars anymore. Use bonds, stablecoins, as the medium of exchange. The US currently has $36 trillion in debt. When they repay, they'll pay you in dollars first. Then you use those dollars to buy stablecoins, which are used to buy bonds. The cycle continues, meaning they don't actually need to repay the bonds. Because every time you exchange dollars for stablecoins, you're lending new money to pay off the old debt for the U.S. government. In other words, you're using your own money to pay back your own debt. The result? The dollars you hold disappear, and the debt the U.S. owes you is paid in stablecoins, a newly issued currency. So, when stablecoins are tied to U.S. bonds, and you use $100,000 to buy $100,000 in stablecoins, you can use those stablecoins to buy Bitcoin. Meanwhile, the stablecoin issuer uses your $100,000 to buy $100,000 in U.S. bonds. That means the same dollar is used twice, once for Bitcoin, once for bonds. The money supply doesn't change, but the assets you can buy increase. This magically transforms the massive U.S. bond debt into currency without anyone noticing. Some might think I'm talking nonsense, that this can't happen. The total market value of stablecoins is only a few $100 billion, while U.S. bonds are $36 trillion. How could it cover that? How could it replace the dollar? True, if stablecoins could only buy Bitcoin, their market value would be too small to solve the U.S. bond issue. But what if stablecoins could also buy U.S. stocks? Why is Bitcoin just a springboard for stablecoins? Because initially, people used stablecoins mainly to buy Bitcoin. As more people use stablecoins, Bitcoin's role as a springboard is complete. Now, all American capitalists need to do is popularize stablecoins. Look at what just happened. A U.S. crypto exchange now allows American customers to use stablecoins to trade stocks like Apple, Tesla, and Nvidia, the hottest stocks today. What does that mean? Before, stablecoins could only buy cryptocurrencies. But if stablecoins can directly buy U.S. stocks in the future, the U.S. stock market is worth $60 trillion. Is that enough to cover $36 trillion in U.S. bonds? Most of the $36 trillion in U.S. bonds is actually held by the Federal Reserve, which is debt that doesn't need to be repaid. So, whether people buy U.S. bonds in the future doesn't matter. As long as you use stablecoins to buy U.S. stocks, the U.S. can directly take your money to buy bonds. And stablecoins have no issuance limit. However much the market needs, the U.S. can issue. That's why Buffett says the dollar is going to hell. Not that it'll become worthless, but that it'll be replaced by stablecoins. Buffett holds a massive amount of short-term U.S. bonds, which is essentially like holding a massive amount of stablecoins. That's why, despite Trump previously hating Bitcoin, what has he done this year? His entire family has issued their own cryptocurrencies, earning in a few months what took their family years to accumulate. He's even issued stablecoins. This is the strategy of visionary families. As for Bitcoin, it's always been an asset I personally accumulate. Recently, in my investment strategy, aside from gold and the Japanese yen, Bitcoin has been the most profitable. Look at this chart. After a major correction, Bitcoin fell to the green line around $77,000 and started recovering. When it broke through the purple descending channel, it signaled the end of Bitcoin's short-term downtrend. So, when the price broke through the orange line around $86,000, we bought in full force. I'm still waiting for an opportunity. You can see the red line. In the past 2 times, whenever Bitcoin hit this line, it turned downward, showing it's a strong resistance level. Now, Bitcoin has broken through that line and isn't dropping quickly. It's consolidating or resting. If Bitcoin later breaks through $110,000 with high trading volume, I might even increase my position. But if it rises without volume, I might just hold and set a take-profit order around $100,000. If you don't understand why I made this plan, what you need to do is prepare in advance, get familiar with my way of thinking and language, understand my entire investment system and methods, and make them your own tools. If you found parts of today's video unclear, I suggest rewatching my last 2 or 3 videos. I'd also like to add that my videos are built with continuous logic. If you don't watch the previous ones, you might think I'm speaking after the fact. But in reality, I've said many things beforehand. I can't repeat everything each time. It'd be too long-winded, and the videos would be too lengthy. At the very least, watch the last 2 episodes. Things will definitely get more volatile soon. Due to time constraints, I'll stop here for today. I'll continue sharing free content on getting rich, starting businesses, investing, and achieving financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video freely. I sincerely wish everyone who liked this video achieves financial freedom soon. If you found even 1 or 2 useful sentences in this video that improve your life, I'm already satisfied.